Hey everyone, welcome back to Corporate Decoder, where we make sense of the big money moves. Today we're diving into CT Acquisition Corp's report, and let's just say they've kicked off their journey with a bang. A really big bang involving lots of units and shares. Alright, so what is this document all about? It is a current report filed with the US Securities and Exchange Commission, basically telling everyone what just happened. And what happened is CT Acquisition Corp announced the completion of its initial public offering, or IPO. This is like a company's grand debut on the stock market. The important date here is the 25th of November, 2025. That is when things really started for this company on the public stage. The company is CT Acquisition Corp. Now, you might hear Acquisition Corp and think they're already buying something, but often these are special purpose acquisition companies or SPACs. Their main goal is to raise money through an IPO and then use that money to acquire an existing private company. So they are essentially a shell company with a bank account looking for a target. They are incorporated in the Cayman Islands, which is pretty common for these kinds of financial vehicles. And their securities, their company stock if you will, are listed on the Nasdaq Stock Market LLC. That is a major exchange where many tech and growth companies trade. Let's talk about what they sold. They offered something called units. Each unit is a package deal. It includes one Class A ordinary share, which is a regular piece of ownership in the company, and one right. The shares themselves have a very small face value, meaning they are not worth much on paper, but represent ownership. Now, these rights are interesting. They give the holder the right to receive a fraction of a Class A ordinary share in the future, specifically 1/5 of a share, usually tied to the success of the company finding and merging with another business. So what they are saying here is that on the 28th of November, they officially closed their IPO. They sold a massive number of these units, 17250,000 to be exact. And get this, the people who helped sell these units, the underwriters, bought even more than initially planned. They bought an extra 225,000 units because so many people wanted them. This is a great sign for a new public company. Now for the money part, each unit was sold for $10. That means they raked in a whopping $172,500,000 from this IPO. That is a lot of cash to start with. When a company goes public, it doesn't just hand out stock. There are a lot of legal agreements involved. This report lists several important ones. We have underwriting agreements, which are the contracts with the investment banks that sold the stock. There is a rights agreement that lays out how those rights we talked about will work. This is important because it defines how shareholders might get extra shares later. And a big one here is the Investment Management Trust Agreement. For SPACs, a large portion of the IPO money usually goes into a trust account. This agreement details how that money is managed and when it can be spent. Think of it as a safety net for investors until the SPAC finds its target. There is also a registration rights agreement. This usually deals with how certain shareholders, like the company's founders or early investors, can get their shares registered and potentially sold on the market. And importantly, a private placement units purchase agreement with the sponsor. This means the company also sold some units directly to its own sponsor, likely on the same day as the IPO. They also entered into indemnity agreements with their own executives and directors. This is standard practice, basically promising to protect them legally if something goes wrong while they are running the company. So about that sponsor private placement units purchase agreement, they sold 255,000 units to the sponsor for the same $10 price. This is common for SPACs where the sponsor helps fund the company's initial operations and usually gets their own stake. This just means they didn't have to go through the full public registration process for this specific sale to the sponsor, because it is an exemption for private placements. Now, what about the folks running the show? On the 25th of November, new directors were appointed to the board. Seth Fardman, Rachel Vidal-Regev, and Yariv Cohen joined. Importantly, they also took roles on key committees like the Audit Committee and the Compensation Committee. Mr. Farbman is heading up the Audit Committee, and Ms. Regev is chairing the Compensation Committee. This is crucial because these committees oversee the company's financial reporting and executive pay, respectively. And as we touched on earlier, they signed those indemnity agreements with these new directors and the existing executive officers, ensuring they're protected as they lead the company forward. They also updated their official company documents, their articles of association. Think of this as the company's constitution, and they filed an amended version that became effective on this same busy date, the 25th of November. Let's circle back to that money. A huge chunk, $172,500,000, from the IPO and the sponsor's private purchase went straight into a trust account managed by Continental Stock Transfer and Trust Company. This is where the bulk of the IPO funds are held until the company completes its acquisition. A smaller portion, After covering some offering costs goes into the company's working capital. This next part is super important for SPAC investors. The money in the trust account is basically locked up. It normally won't be released unless the company finds and completes a business combination with another company. If they don't find a deal within a certain time frame, usually 18 to 24 months, investors can get their money back through redemption. A small portion of the interest earned can be used for taxes, and up to $100,000 for winding down the company. The rest is for the acquisition. So it is a structured process to protect investors while the company searches for its merger target. They also announced the IPO pricing on the 25th of November, and then a follow-up press release on the 28th of November to announce the successful closing of the IPO. And finally, the filing lists all the exhibits, which are the actual legal documents we've been discussing. This is like the appendix telling you where to find the full contracts, like the underwriting agreement, the rights agreement, and the trust agreement. Now, looking at this report, South Carolina 2 Accession Corp has successfully navigated the first major hurdle, going public and raising a substantial amount of capital. This $172.5 million provides them with dry powder to find and acquire a suitable private company. The structure with funds in a trust account is a standard and investor-friendly approach for SPACs, offering a level of security as they search for their target. The early appointment of directors and committee members suggests a commitment to good governance from the outset. The successful over-allotment of units indicates strong investor demand, which is a positive signal for the company's future fundraising capabilities once they announce a business combination. The primary risk for any SPAC is failing to find a suitable acquisition or announcing a deal that doesn't create value for shareholders. The clock is ticking, usually 18 to 24 months. To find that target, if they can't, investors get their money back, which is fair but means the SPAC effectively dissolves. The story here is one of potential. They've secured the funding and set up the structure. The next chapter will be about finding that perfect merger target and executing a successful combination that hopefully leads to long-term growth and shareholder value. It is a high-stakes game of finding the right partner and making the marriage work. Alright, that is our deep dive into Stecky Accession Corp's IPO news. What do you think of their strategy? Let us know in the comments below. If this breakdown was helpful, give us a thumbs up and subscribe for more corporate financial decoded. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.